Welcome back, everyone. I'm Laura Davidson, partner here at Fourlane, and I'm really glad to have you with me for part two of our Intuit Enterprise Suite series. In our last session, we focused on structure, connecting entities, mapping intercompany accounts, and enabling automation. Essentially, we built the plumbing. Today, we're going to turn on the water. We'll see how IES takes all that setup work and transforms it into real-time financial visibility. Whether you're managing a handful of companies or a complex multi-entity structure, this session will show how IES brings clarity, speed, and confidence to your reporting process. Here's what we'll be covering today. We'll start with consolidated reporting, how IES eliminates the need for manual Excel merges and gives you instant access to combined financials. Then we'll explore dimensions, a powerful reporting feature that goes far beyond classes and locations. From there, we'll dive into dashboards, cash flow, and budgets, and IES's built-in AI features that flag anomalies and surface insights you might otherwise miss. Finally, we'll take a deep dive into consolidated reporting and wrap up with some best practices to keep your reporting clean and efficient. The goal is simple. By the end of this session, you'll see how IES turns accounting from a month-end chore into an ongoing strategic advantage. So before we jump into reporting and analytics, let's take a moment to reflect on where we left off in part one. In that session, we built the foundation. We established our multi-entity framework, defined parent and subsidiary relationships, set up due to and due from accounts, and configured the automation that allows IES to handle intercompany activities seamlessly. What that means in practice is that every transaction now flows automatically between entities. When you create a bill or journal entry, IES posts both sides of the entry, so you're no longer spending hours on manual reconciliations or journal adjustments. But setup and automation are just the starting point. The real value of IES begins once the system is live. When you start using that clean, structured data to understand performance, identify trends, and make faster, more confident decisions. So in today's session, we're moving beyond process and into purpose. We're going to explore how the structure we built in part one powers reporting, dashboards, and analytics, helping you go from what happened to why did it happen and what should we do next. This is where IES becomes more than accounting software. It becomes your organization's financial intelligence system. So why does all this structure matter? Let's look at what happens when consolidation isn't streamlined and how IES transforms that process. In traditional QuickBooks desktop environments, consolidation was a manual process. Exporting individual reports, copying them into Excel, realigning accounts, removing intercompany balances, and hoping everything tied out. That manual work introduces errors, delays, and version control issues, and you're often consolidating yesterday's data, not what's happening today. In IES, that entire workflow is automated. Once your entities are mapped, IES knows which accounts offset between companies and eliminates them instantly. Your consolidated financials update in real time, so you can open your P&L, balance sheet, or cash flow and immediately drill down by entity, department, or even project. The impact is tremendous. What used to take days in Excel now takes seconds. And clients tell us it's not just faster, it's cleaner. They're closing their books earlier, reporting more confidently, and spending their time where it matters, analyzing results and advising the business, not cleaning up the spreadsheets. Now that we understand the why, let's explore the how. Here's what real-time consolidation looks like in action inside the IES platform. Here's what a consolidated profit and loss looks like. What's happening here is that IES is pulling financial data from each individual entity in real time, combining it into a single unified view. You can see each company represented as a separate column along with a total consolidation column at the end. There's no need to export data into Excel or run manual merges. IES handles all of that automatically behind the scenes. The system recognizes your mapped intercompany accounts, those due to and due from relationships we created during setup, and it automatically eliminates those balances. So when you're looking at your consolidated financials, you're seeing a clean, accurate roll up without intercompany noise. And if your finance team still prefers working in Excel, IES supports that too. You can export this view directly or connect it through Spreadsheet Sync to keep your models live with real-time data. The big takeaway here, you're no longer consolidating after the fact. You're monitoring performance across entities as it happens. Let's go take a look in product, and I'll show you how easy it is to create these reports. So you go to your standard reports. Here I can grab my consolidated P&L. Now this is just showing me a total for both companies, but I can go to display and select to display by company. This is where it breaks down each entity individually, gives me my elimination column, and then my total column. I can do the same thing with the balance sheet, my consolidated balance sheet. Go to display, display by company, and now it gives me my individual columns for each entity and my eliminations. So now that we can see how consolidated reporting gives you that single source of financial truth, the next question is, how do we make those numbers more meaningful? That's where dimensions come in, a feature that adds depth to your data beyond just entities and classes. Dimensions are one of the most powerful features that separate IES from traditional QuickBooks products. In the QuickBooks desktop world, we've always relied on classes to segment financial data. And in QuickBooks Online, they added locations in too. And that worked fine until a company needed more than two ways to view their business. Dimensions changed the game. With IES, you can create multiple analytical layers: department, product line, funding source, region, customer group, whatever makes sense for your organization. Let's take an example and imagine a construction client with multiple entities. Each job can be tagged by region, project manager, and project type. Now, instead of sorting through dozens of classes or creating redundant accounts, they can simply filter by any of those tags. That means management can look at profitability by project type, compare departments across entities, or even analyzing marketing spend by region, all from one report. And because dimensions are applied across the entire IES environment, your reports automatically span entities. You're no longer building siloed views. You're looking at the whole business in context. From a consultant's perspective, dimensions are a game changer. They let you deliver deep operational reporting without creating chaos in the chart of accounts. For clients, it's a shift from what are my totals to what's driving my performance. Dimensions make that possible, simple, clean, and at scale. Once we've tagged transactions across the right dimensions, reporting becomes more flexible than ever. Let's see how we can turn static reports into truly strategic tools. And I'm going to I want to remind you, when we look at a transaction, the dimensions are not on the top half, so they're not in the header like locations, okay? They're actually at the line level. So similar to class in QuickBooks Online. These are your dimensions. So I'm going to take earthwork, for example. These are my dimension that was created. So I have my excavating and I have grading, and I can choose whether it's general or my sub. So I can pick that. I can also go to concrete. I can do my slab. I can do utilities. And if you create another line, I can change it on the next line, just like you used to be able to do, or you can still do with classes. Okay. So that's how you get it on the transaction. Let's go take a look. There's a report that's already created here. You can see a P&L by dimension. So here's my report giving me my total. I have to go to display, and here's where I can choose my dimension. So I can see my concrete dimensions, I can change that and decide to look at my earthwork. Now, you don't have to do this every time where you go in and choose the different dimensions. You could actually rename this. I could call this my earthwork dimension and save it. Once I save it, it goes into my custom report, so I can just go grab that every time without having to recreate it. Also, here's where you can export out to Excel, Google Sheets, PDF, or CSV. Okay. All right, let's come back over here. And we're going to go look at custom reports now. So reporting, this is one of the areas where IES really separates itself from the traditional QuickBooks products. And instead of relying on a fixed list of reports or spending hours exporting and reformatting in Excel, IES is giving us a drag and drop report builder. And it's designed for everyday users, not just accountants. You can build a P&L report, departmental expense summary, or a project profitability view in minutes. Just drag the fields you need, reorder your columns, and apply filters. The beauty is that these reports are completely customizable. Your CFO, if they want to see by entity, but your operation director wants to see by department or region, both can have their own versions using the same live data set. You pick out your template, and once you get a template you like, save it. It's easy to standardize across departments or across clients, which is a huge benefit when it comes, especially to managing multiple entities. And when it comes to sharing data, IES keeps it modern. With Spreadsheet Sync, you can link any report directly to Excel or Google Sheets. That means your spreadsheet isn't a static export, it's a live connection. So when transactions post, dimensions update, or an intercompany entry clears, your spreadsheet updates automatically. Think about what that means operationally. No more emailing files, no more version confusion, and no more manual refreshes. Everyone works off the same real-time numbers. In other words, IES doesn't just make reporting easier, it makes it smarter, faster, and more collaborative. Let me take you in. I know we were kind of looking around at custom reports a little bit. I want to take you in and create a new report. This is my list. This is my list of my different custom reports. Let's create a brand new one, and let's do this. Let's call this sales. Create here. So this is for the month of October. So here's my columns, and like it says, you can drop and drag. So I can move things around and I can reorganize. I can add more columns if I want. So if we look at the lines itself, I can add in dimensions. So I can add in earthwork. Let's see, let's do concrete. And I'm also going to pick my utilities. Let's do those three. So then what this also allows me to do is I can group by. So here I can say, let's group by customer. What this does is this gives me each customer in a group. We can even add a subgroup if we want to and say concrete. So it gives me Abigail, total for sub. You can do quite a bit with this. The other thing, I'm going to back out the groups here. Let me clear this. I want to show you also, you can do a pivot. So with a pivot, I could choose, let's do account. Well, actually, let's do customer. And we'll do columns by earthwork. And I'm just going to pick them out here. This actually just did a pivot table for me. I have my earthwork here at the top. I have my totals for that. So Custom reports you can do an awful lot with. It's actually honestly the next step in being able to visualize pretty much anything you want, moving these from data tables to interactive dashboards. So that's the next thing I want to take you into is the dashboards. Um, so in IES, the dashboards are not quite like the traditional QuickBooks desktop environment where reports are static snapshots. The dashboards in IES update live as transactions post. For example, we might have a CFO start their day looking at revenue, gross margin, and cash balance across all entities, but your controller might focus on outstanding AR or AP and month-end close status. And then your department heads, they're looking at KPIs specific to their team, like project profitability or billable hours. Every dashboard is role-based, so each user sees exactly what matters to them and nothing else. This not only streamlines decision making, but also helps protect confidential data across entities. And because the data is live, you're not waiting for an accountant to run a report or update a spreadsheet. You can see performance as it happens. The built-in AI engine goes a step further by monitoring those KPIs for anomalies. If a trend looks off, say marketing expenses suddenly spike 20% month over month, IES will flag it visually right on the dashboard. You didn't have to hunt through rows of data to spot it. And this gives leadership teams real-time confidence in their numbers and the ability to act immediately, not weeks later when the books are closed. The goal here is simple, to move from reporting history to managing the present, and that's what IES dashboards make possible. Let's go take a look here at some real dashboards. So this is my dashboard based on my user role. We are able to customize, okay? So maybe AR is my most important thing to see today. And after that, I want to see cash flow. So I can move those. I can also add or remove any of these different KPIs we see here. And then when I'm done, I can say done, I save. And then from here, I can go into my reports, okay? Now, currently, I don't see any AI flags. So it looks like everything, I don't have any anomalies at the moment here, but I am going to go ahead. I'm going to talk on the next slide too. I'm going to talk about cash flow, but since we're here, I'm going to go ahead and show you. So over here on cash flow, so it gives us AI forecasted cash flow directly from our books. So it's giving me a 13-week look. Okay. Also, from here, there's some AI here. This gives me a few insights because it found some anomalies. So it's saying my 80/10 depreciation declined by 27% from September to October. So I can click on that. It says, and it's reviewing my books. It is trying to find where this anomaly is. So it's saying my depreciation decreased in October because some assets were not depreciated that month. Also, there's missing entries. Okay. This one too, the decrease in job supplies is due to one large time expense in September, 25,000 generic expense from Concrete Depot in September. You can download these detailed reports. That makes it super easy to find those. Let me take you back over here. So we just looked at the cash flow. So instead of exporting reports, creating spreadsheets, and updating numbers at month end, right? We can just go in here and it's already pulled from our data. The problem before is that those reports are very time consuming. And by the time you get those created, they're out of date. With IES, it changes this by giving you real-time visibility into your organization's cash position across all the entities. You can instantly see where your cash is sitting, how it's moving, and what's driving the changes, whether that's receivables, payables, or intercompany activity. And then on the budgeting side, IES lets you build and maintain dynamic budgets that pull directly from live data. So you're not recreating your chart of accounts in Excel. You're using the same data you already trust. You compare actual versus budget at any level by entity, department, or project and make adjustments on the fly. For example, if a department is trending over budget in travel or marketing, you can identify it immediately, not at month end. These insights help organizations practically manage spending, make faster adjustments, and stay aligned with strategic goals. For leadership team, the big win is visibility. Instead of waiting for someone to send a report, you can log in and see your current cash and budget position anytime from anywhere. And because all the data flows from one unified system, you're not worrying about version control or formula errors. You're working directly with your live books. The real-time budgeting capability gives our clients confidence. They know where they stand financially, and they can make better decisions based on accurate, up-to-date information. So I'm going to take you back over there, and we went through that. So with the cash flow too, you can come over here to multi-entity. It does give you a cash flow statement. So you can see consolidated cash flow. Gives you your total here. Same thing as balance sheet and P&L. You can come in and see that by individual company. Okay. Also, what we're talking about was budgets. So here you can create your different budgets. I do have a couple in here already. Just this is a sample file, so we've got a lot of different ones going on. But you can create a brand new budget. We can do by P&L. You can do by balance sheet, project-based. You select your period, budget format. You can do consolidated. You can also do subdivided, which is interesting. Subdivided, you can pick your class, or you can pick your dimensions. When you pick dimensions, it gives you another drop down where you can choose additional, okay? And then we can choose to have it pre-filled data using data from the system, actuals, okay? Very flexible there. On reports, you can always come up here and type in what you're looking for, so I can see budget overview. This is just giving me my 2025 budget for Keystone Construction. There should be also budget versus actual. Again, this is showing me my actual numbers, my budget, over budget, and percent of budget. Okay. The next thing we're going to go take a look at is AI. So traditionally, reviewing financials means waiting until month end, comparing actual versus budget, manually scanning for anomalies. Maybe a department spent too much or a vendor payment doubled unexpectedly. In IES, that entire process is automated. The system's built-in AI engine continuously reviews transactions in real time. It looks for patterns, and more importantly, it looks for deviations from those patterns. Let's say your marketing expenses spike suddenly, or your cost of goods sold increases outside the normal trend. Instead of you having to notice that in a report, IES will flag it automatically, visually marking the anomaly right on the dashboard. The AI doesn't just alert you, it also provides context. It highlights the most likely reasons for the variance, whether that's a timing difference, a new vendor, or a potential miscalculation. And IES learns over time. So when you correct or reclassify an entry, the system remembers your adjustment. So the next time it sees a similar transaction, it already knows how you typically handle it. Think of it as having an intelligent reviewer built into your accounting system, one that works 24/7, never misses a detail, and only gets smarter the more you use it. The benefit is huge. Fewer surprises, faster closes, and higher data confidence. And from an audit perspective, AI-driven variance detection means every flagged transaction has a clear trail. So who changed it, why it changed, and when it was corrected. For clients, this turns financial oversight from a reactive cleanup to a proactive prevention process, catching issues before they affect your financial statements. For example, one of my clients in professional services noticed that travel expenses were increasing, but they weren't sure why. IES flagged the variance automatically, and within seconds, they discovered a misapplied vendor category. What used to take hours of digging was resolved in minutes. And that's the kind of intelligence that clients immediately see value in. And I wanted to show you a little bit more here. So right here in product, in the report section, you can click review summary. It actually is going through my September financials and analyzing. So it's pulling highlights here. So it gives you a little bit of a dashboard here. So it goes through a little bit about what it's seen. So it gives you the quick button to get down to income or get down to where it's talking about the net income percentage. So what it's seeing, it's also going to give you a little blurb here about what it's finding. So this is saying income shows a large spike in February, which is a major anomaly compared to other months. This one shows COGS shows negative average with budget overrun alert. So definitely things we need to pay attention to. Significant anomaly in gross profit margin detected. And so we've got some big changes over here. Significant increase in expense with October anomaly. Even gets into my accounts receivable fluctuations. So it says in this one, Keystone Construction accounts receivable averaged 93.4 thousand from January to September, with a significant drop of 60,000 in September after several months of stable values. Top contributors. So just interesting. Also gives you cash flow increase anomaly. So definitely things to come in here and pay attention to. All right. So now that we've seen the system's intelligence layer, let's step back and take a closer look at the full reporting environment. One platform, one data set. This is where we really start to see the power of bringing all your entities together into one system. Okay. So with IES, we gain complete visibility across the organization, whether that's multi-companies, divisions, or locations. They're all rolled into a single reporting framework. Instead of manually combining the spreadsheets or reconciling data from different systems, IES does that automatically behind the scenes. This allows management to analyze performance, monitor intercompany activity, and make data-driven decisions in real time. For most clients, this is the single feature that makes IES a true enterprise solution. So just one more time here, let's go back in product. I wanted to show you there are additional consolidated reports, and they're still doing development and expanding on these. But we've got our main financials, the balance sheet, the P&L, the cash flow, which we've already taken a look at. We can also do a consolidated trial balance. Okay. Display again, and I haven't looked at this one. Let's see what this looks like when we do company. Okay, so it gives you your individuals, and it gives you your total column. We do have AP, so you can see your AP aging. Now with this one, it breaks it down into a group for each one. And we've got the detail as well. We've got AR aging. Again, same thing. It is breaking it down into a group for each entity. Let's take a look at the details, see what that looks like real quick. Okay, so detail And let's see, for filters, we can filter by company. You can just select the one company. Okay. Right now, let's see, consolidated transaction report. What this has normally been showing, and I can also come and get it from this direction, I believe. Let's see. Right now, I believe it's still just giving our journal entries for the intercompany. I don't think this is, I guess I don't have anything in here right now. Interesting. So that's still being developed on that side. Um, consolidated expenses by vendor. There we go. And this one I can come in and display, excuse me, by company. Oh, and the report list is still growing. These are at least doubled in the last couple of months here. So we're still in development and still gaining more reports, but it's pretty exciting to see what's coming in. All right, guys. So we're going to start wrapping this up just with some best practices to keep your IES reporting clean and efficient. So first, consistency is everything. Use a unified chart of accounts across your entities so consolidation stays accurate and eliminates manual alignment. Next, review your intercompany mappings frequently, especially if new accounts or subsidiaries are added. A quick monthly check prevents reconciliation headaches later. It's like when I was going through my mappings the other day, I saw that the intercompany for Keystone Terra was going to prepaid inventory. Completely made no sense. So I had to switch that to my intercompany account. Dimensions are powerful, but only when used consistently. Define clear naming rules for departments, projects, or business units that keeps your reporting structured and easy to filter. Role-based permissions are another key factor. They limit access to relevant entities. It protects sensitive data and prevents accidental posting errors. Before running consolidations, make sure reconciliations are complete. This ensures what rolls up is clean and audit ready. And whenever possible, encourage your teams to use dashboards instead of static Excel exports. Live data means fewer errors and faster decision making. Schedule a monthly variance review using your AI anomalies before they become closed cycle issues. And finally, document and share your report templates. That simple step creates uniformity and save hours of rework when the team or when new team members join. Follow these best practices ensures that the reporting foundation you built in IES stays strong and efficient long after implementation. So let's take a quick moment to summarize what we covered today. So in part two, we move beyond setup and automation to explore how Intuit Enterprise Suite delivers real-time financial intelligence. We saw how IES consolidates data instantly across multiple entities, giving leadership teams a single accurate source of truth. We looked at dashboards and reporting, how every user can view their key performance indicators in real time with the ability to drill down into any number or transaction. We also discussed how the built-in AI engine acts as an extra layer of protection, catching anomalies before they become errors, and learning from your activity to continuously improve. The result? Fewer manual processes, cleaner financials, and faster, more informed decision making. For our clients, this represents a true shift from reactive bookkeeping to proactive financial management. For Fourlane consultants, it's an opportunity to bring deeper strategic value to every engagement, using IES not to just automate, but to advise. And guys, if there's one takeaway from today, it's that IES transforms financial management from a set of disconnected tasks into a continuous, intelligent process, one that saves time, enhances accuracy, and empowers better decisions at every level. And that brings us to the end of our walkthrough today. Remember, automation isn't just about speed, it's about confidence in your numbers. So thank you so much for joining today. If you have any questions or need help implementing any of these features, I'm happy to assist further. Thank you so much.